Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. We have a returning guest who appeared back early this year, which was in March 2022, episode 217. So please go back and listen to that episode following this episode, just to see how far Mark has come in his journey. And today we're speaking to Mark Bishop Fletch, who's the CEO of Anglo Pacific Group, who are a global natural resources royalty and streaming company listed on both the London and Toronto stock exchanges. They're giving investors exposure to various commodities such as cobalt, copper, nickel, and uranium. Mark has a banking and international finance background and has been with Anglo Pacific for the past 8 years, and just recently moved into the CEO role. And he's going to give us an update on the company since we last spoke earlier this year. So let's welcome Mark back to the podcast. How you doing, Mark?
Yeah, very well, Rob. Thanks for having me back.
No, and I appreciate your time, and it'd be good to get an update. Obviously, sitting in the hot seat as the CEO, and I think when we last spoke, you just recently entered that new position. So it'd be good to see how your journey has gone since back then. So before we go into that, for those that didn't listen to the previous episode, just wanted you to give us a quick, brief snapshot of yourself, and also Anglo Pacific as well.
I'd be delighted to. Well, why don't we start with Anglo Pacific Group, which is arguably the much more interesting of the two. Anglo Pacific Group is, as you mentioned, dual listed in London and in Toronto. We are, following our most recent transaction anyways, now firmly positioned as the leading royalty company focused on future-facing commodities. And by that, we mean the commodity group subset really required to achieve a more sustainable world. We've pivoted this business from its roots of being effectively a coal business, providing coal exposure, such that in the next 4 years, 100% of our commodity exposure will be to things like copper, nickel, cobalt, really the key commodities required for a cleaner, greener world. Personally, I joined this business, as you mentioned, Rob, 8 years ago. It certainly, saying it out loud makes it seem like a much shorter period than it has been. But over that period of time, been involved in all the transactions we've done to reposition this business, and incredibly proud of the portfolio that we've built with exceptionally strong counterparties and robust assets with robust positioning on global cost curves, such that they're well positioned to weather volatility in the mining sector, which, as we know, can lead to pretty wide swings. Go on, Rob. Sorry.
No, just as I carry on.
Well, I think on the last piece, it's been an amazing journey. I found it incredibly rewarding to be part of this, what we see here as an amazing company with really motivated staff, from everyone included, arguably quite singularly focused on our vision and our strategy. We have an amazing opportunity to create a pretty special business at a time when the world really needs this type of financing.
Obviously, you've had a busy, quite a few months since we last caught up. Just wondered what have been your highlights since you took over as the CEO?
Yeah, well, I stepped into the CEO role at a pretty amazing time for Anglo Pacific Group. Our portfolio has been performing exceptionally well. We've had really strong financial performance. So that's a great time to step into this chair with those tailwinds. That's allowed us to repay debt and de-risk our balance sheet. And then on top of that, in the world today where inflationary pressures are really affecting the mining sector, whether that be in terms of operating cost inflation or capital cost inflation, we've seen a lot of that. I'm sure you've picked up on it as well, Rob, in Q2 results, and it's likely we'll see more over the course of this year. That's all really highlighted one of the virtues of the royalty model, where we are indirectly really well positioned and insulated from these cost pressures. such that investors in Anglo Pacific Group retain the positive inflation in terms of commodity price inflation going up without the margin compression impact of operating costs going up incurred by miners. That's allowed us to complete our second biggest acquisition in the history of the group a month or two ago, where we acquired a portfolio of advanced stage copper royalties and copper and nickel royalties from South 32.
Yes, I just want to go on to a little bit detail around that acquisition. I just wanted to tell us a little bit more about that deal and how the acquisition is going to benefit Anglo Pacific.
In a nutshell, the acquisition is straight down the fairway of our strategy. It substantially increases our exposure to copper and nickel, which has been a key strategic focus of Anglo Pacific Group. And furthermore, the counterparties here, the two key royalties really, one relates to the Capstone Group, a royalty at Santo Domingo project, and the second to the West Musgrave project owned by Oz Minerals. Both exceptionally high quality projects, expected to have very low cost once built. And most importantly of all, post-transaction, the core of our business today is something we're really proud of, is now approximately 70% copper, nickel, and cobalt, which is just remarkable considering that we started 100% met coal almost, not quite 100, but very close, 100% met coal 8 years ago. So this transaction is a huge step forward, consistent with the direction of travel, but it firmly positions us as the leading royalty company in the non-precious metals, future-facing commodity space. It's an amazing achievement, and as a company, we're really proud of this. How has it benefited us? Well, I think first of all, it'll benefit us in that we have exposure to two commodities here, nickel and copper, that have incredible long-term fundamentals. Like, the reality is, if we have any hope of achieving the energy transition, there's no doubt that the world will need substantially more nickel and copper. So we have, beyond what we think are really attractive base case returns, identified really attractive upside on commodity prices. Furthermore, we see upside in terms of life of mine extension, production upside potential. So all the things we look for in a royalty. And most importantly, we have done it all while maintaining a really attractive jurisdictional footprint, where we were still approximately 90% OECD, which is where we were when we started 8 years ago. So all in all, we think this is a really attractive addition for folks who are looking for de-risked exposure to the basket of commodities that are required for decarbonization. And you'll remember, Rob, when I was last here speaking with you, I was, forgive me for belaboring the point, but pretty clear that our strategy was to build up with this exposure, and therefore I feel as though we've delivered exactly what we said we would.
Yeah, which is certainly good to hear. And obviously, following on from this acquisition, you've reported your fourth consecutive quarterly record portfolio contribution. What contribution, what has sort of contributed towards this?
Across the board, I would argue it's strong performance from our underlying assets in our royalty portfolio, further benefiting from record or near record commodity price levels. In particular, copper's done well, cobalt's done very well, but the most meaningful commodity of all has been coking coal, which is somewhat counterintuitive. There's no doubt about it, in that we're sitting here today as Anglo Pacific Group saying we're for future-facing commodities. The reality is we're in a transition. Our met coal exposure will run down by 2026, such that we won't have any coal exposure thereafter. But in the meantime, we're taking what have been exceptionally strong coal cash flows resulting from really, really attractive metallurgical coal prices, and recycled that directly into copper and nickel. So it's been pretty amazing to report quarter after quarter of records. We think that on H2, we've already seen commodity prices soften. So would we expect another record quarter in Q3? Probably not. That being said, commodity prices still remain at very attractive levels. They've come down from highs, but they're at levels where 12, 24, 36 months ago, we'd say they're well above spot. So all in all, we feel our portfolio still should do quite well in the second half of this year and into the future.
Just briefly mentioning about coal, you've obviously benefited this year with higher coal prices. What are your plans for utilising the high cash inflow as your pivot towards future-facing commodities?
Where we sit today, based on the portfolio we've built, in the medium term, we see a path to sustainable royalty income in the range of $100 million, which is something that is positioned Anglo Pacific Group for really sustainable levels of income, and therefore a potential path towards sustainable increases to capital returns. But in the meantime, we see in the market today really attractive opportunities to continue to grow. And therefore, in the near term, it's likely that we will first and foremost look to continue to repay debt such that we have a very strong balance sheet. Second, look to grow via further royalty and stream acquisitions. And beyond that, there will come a point where the market is such that it's more prudent to return capital to shareholders rather than grow. But we certainly don't feel as though we're there yet.
Obviously, high inflation, high in input costs across commodities is a really hot topic at the moment. Everything obviously seems to be increasing. What does that mean for Anglo Pacific?
Well, that's really, you've hit the nail on the head there. That's actually one of the key virtues of the royalty model, in that by investing in a royalty and streaming company, investors can have exposure to commodity prices, which are really benefiting from inflationary pressures, without the direct exposure to the operating costs or capital cost increases that exist in mining companies.
And I suppose concluding, what are your expectations for Anglo Pacific in the second half of this year, and obviously probably going into next year? And do you sort of have any further plans or opportunities in the pipeline at all? Are you looking at any particular commodity? And obviously you mentioned the range of commodities you're involved in, or is there any certain jurisdictions that you tend to be looking at this moment?
I mean, how much time do you have, Rob? Because I could speak about this one for hours.
As long as you want.
You're too kind. I think the short version here is that it's a really attractive time to deploy capital. Commodity prices have pulled back. Equity markets at the moment are really challenging, particularly for mining companies or for anyone looking to raise capital in the public markets. We've seen incredible drops in issued volumes in the last 12 months. And as a business that's sole purpose of existing is to provide financing to the mining sector, this is really what we look for in terms of capital deployment. So we would certainly hope that we can continue growing and adding to our portfolio, and we are involved in reviewing a number of really exciting opportunities. But I would say that's always the case. We've been really successful at Anglo Pacific by being disciplined. And so if an opportunity isn't quite right, or if it's off strategy, we're very happy to be patient, and we're confident that the next one will come along, so to speak. Having deployed almost $400 million in the last 18 months, I think we've proven that the opportunity set is there, and our investors are rewarding us and are keen for us to maintain that level of discipline. So if you don't see anything from us in terms of transaction in the second half of the year, that certainly doesn't mean we're done. We are very keen to keep growing this business, very keen to keep adding assets, as I mentioned, in terms of commodities that are in the base metals complex, absolutely, but also keen on other commodities that are slightly more niche. For example, rare earths. Cobalt is something that is typically well understood, but we think has really attractive long-term fundamentals. High purity manganese. And beyond that, we, as always, really look at opportunities or projects that don't necessarily produce commodities that flow directly into, say, a battery or a wind turbine. But if a project is greener, and by that I mean if a project can produce a ton of, say, potash at an industry-leading carbon footprint, we think that's really attractive. And we also think there's a big role for that in our portfolio. So as always, keep your eyes peeled, Rob. We really look forward to telling you about our next transaction.
Yeah, I've actually got one more question I've just thought of. How is the financing within the mining industry on the whole? Are companies struggling to get finance, or is finance easily available if the projects are good, or the transactions are good? And obviously you come from a finance and investment background. How would you sum up the I suppose the investment market within the mining industry?
I think I would say that the mining sector at the moment is not immune from the wider economic challenges that are affecting all capital markets. That being said, there are very clear long-term structural trends that, driven by the energy transition, that everyone is pretty clearly in agreement will result in supply deficits across the commodity space. And so is it harder to access capital today? Yes. But is there capital available for the mining sector today in a way that's much more abundant than in, say, 2016, for example, when we saw some pretty tough times in terms of commodity prices and general macroeconomic conditions? Absolutely. So to put it shortly, do we anticipate, I think most investors anticipate choppiness in the near term, but beyond that, the outlook for these commodities is particularly robust, and therefore it does seem that good quality projects will get financing.
Yeah. Mark, really appreciate your time coming onto the podcast again. It's clearly you've been a success in the CEO role, and obviously your journey is only continuing. And obviously wish you well for the remainder of the year. And hopefully we can get you back on the show the beginning part of next year, maybe with another acquisition or deal. But obviously give us an update on the company. So yeah, really appreciate your time.
Thank you for hosting me. It's always a pleasure, Rob. Very much look forward to being back.
Yeah, no worries. Thank you guys for listening. Hope you enjoyed the episode. Obviously, royalty and streaming companies is a great model for investing. Myself, I'm investing in a few royalty and streaming companies, so I do understand the model. So appreciate you for listening. Please share this episode amongst friends, family, acquaintances within the industry across the world to get this education out to the masses within the industry. So until next time, happy mining.